What is going on, everybody? Paul here, coming at you with some crypto coffee update news and events. Also going to be looking at some coin market cap coins today, so we got that to look forward to. But before we get into anything, you know what we got to do. Join me now for a simultaneous sip. Like putting the keys in a car and starting it up. Alright, so let's go ahead and get into what's going on in the news today. EOS hits 1,200 transactions per second while Ethereum suddenly faces congestion. Coincidence? Interesting question to pose. However, there is some background as to why the title is phrased like this, and we're going to go ahead and unpack that momentarily. But first, let's take a look at this dank OC meme from the Just team, the individuals who came to these conclusions doing their own research. Cheers to them and cheers to their memeability. Let's go unpack what they found coming out of trust nodes. Beginning around 10 hours ago, for a very brief second, EOS hit 800 transactions per second and kicked it up to 1,200 shortly afterwards. It did return to normal after that, however, it is unclear how these transactions per second are being measured. A quote from an Ethereum app dev: "If you don't think EOS is doing it, that is, increasing the gas prices, then who else has $2 million per day to attack Ethereum and owns EOS tokens?" We'll explore why the EOS tokens is an important variable. However, he is correct. Due to gas prices, the cost of sending something across the Ethereum network, it would cost around $2 million a day to bump up the average transaction cost to what it is. Dan Larimer was able to respond and said, "I can assure you Block 1 would not be so stupid to spend our resources attacking ETH when all it takes is CryptoKitties. There are far smarter and more cost-effective ways to bring ETH down if that were the goal." Well, considering that CryptoKitties still would cost gas because it's a unique transaction, one has to wonder what Dan is referring to, considering EOS had a lot of bug bounties paid out itself. Another suspicious point: who's transacting so much on EOS given the mainnet issues? It took Ethereum 3 years to reach 500,000 transactions a day, and it is the predominant smart contract network in the world. And here we are. Yet we are to believe EOS, which has been facing problems upon problems, including $30 RAM fees, has in a week attracted tons of demand comparable to ETH. Another article out of Trust Notes further explores the issue, saying that EOS is indeed attacking Ethereum, raising transaction fees to $1 or more. As an individual who uploads to Viewly, I can assure you that $1 is the bare minimum. I recently spent above $2 to get my content uploaded, so this is something that's affecting everybody. Quote, "Myself and other high-profile Ethereum application devs have made a prediction that EOS would, in all likelihood, attempt to attack the ETH network gas prices to validate the launch of their platform. Without fail, every day up until the launch of the EOS platform, which was June 6th, gas prices increased due to these, quote, airdrop tokens. Thousands of random tokens with no website or bootstrapped template websites made in a few hours, wasting hundreds of Ethereum daily, hundreds of thousands of dollars just to drop these nonsensical tokens. This happened up until the launch of EOS on the 6th and then immediately stopped. In one day, gas prices returned to normal. And I can corroborate this. Like I said, I use the ETH network pretty much every day for uploading to Viewly and other things like that, so it's really interesting to see those correlations. Now, there has been some conclusions drawn between what's called Fcoin and also iFish token and the Ethereum gas prices. Fcoin doesn't really show up anywhere in blockchain data, and it says here that there's no smoking gun in regards to EOS, although it does appear someone who's bought a lot of EOS tokens is now funding these random tokens and is taking up a very large share of the ETH network's capacity. And you can see here as well, Justo alleged that the iFish token creator was essentially wash trading on the Ethereum blockchain by just sending tokens back and forth. And this is where I'm going to push back against this article because I don't think they go far enough. There is indeed a smoking gun. We found it yesterday. Some great research coming out of the Just Discord. Manipulated ETH network gas prices look connected to EOS-funded bot accounts. This is a great find. It goes into detail using just etherscan.io, the primary source of primary sources, the Ethereum chain, and demonstrating how these contracts just funnel money from one account to another, then to another, and then ultimately back to the main, what's called Big Daddy account that has all of the coins. Stranger still, you can see here, geez, that sure is a lot of crowd-funded EOS, hundreds of thousands to be exact, which is nothing to scoff at, from an account that seems to receive large sums of EOS and immediately selling them from market orders. We're talking thousands of ETH, which is then distributed out to contracts like this, the smaller contracts that just do wash trading, contracts that have been pulling this kind of transaction attack consistently across the ETH network, as we just saw from the Trust Nodes article. And the credit, Just Discord, you can see the meme we saw earlier mentioned above, some great research. This is what I mean when I say DYOR. This is a head and shoulders above what we normally see coming out of the research community. So cheers to them. Great work, great find, and really this, again, as most good journalism does, raises a lot more questions than answers. So from what we can see here, it looks as though, even though this may not be block one definitively, somebody with a lot of clout and a lot of money is manipulating the ETH network intentionally using these weird smart contracts. It'll be interesting to see how things progress from there. That's all we have for the news today. We'll go ahead and put this subject on the shelf until some more things develop around it. For now, let's go ahead and look at some of the coin market cap coins, a new series we're doing where we check out the top coins, talk about them, examine what they do very briefly. Who knows, you might find your favorite new coin here on the Crypto Coffee Update. So let's go ahead and get into number 9 through 12. Number 9 is IOTA. IOTA does not use the traditional blockchain, but rather uses what's called a directed acyclic graph, or a DAG, that they call the tangle. This allows transactions to be sort of out of order, but cross-reference one another to form a type of web rather than a singular chain. This does, however, present some unique vectors of attack, including what's called a 33% attack. For this reason, IOTA is indeed, admittedly, centralized. They use what's called a coordinator node to have transactions run through that to ensure that transactions are indeed legitimate. This doesn't seem to have dissuaded many major corporations, however, as they have announced partnerships with Volkswagen, one of the largest auto manufacturers in the world, to prove that the tangle indeed works. Next up, we have Neo. In their own words, Neo is a non-profit community-based blockchain project that utilizes blockchain tech and digital identity to digitize assets. They're a smart contract network similar to Ethereum and are a Chinese-based company. You can see here that there are not many consensus nodes available. This is because Neo as well is centralized. Running in the same vein as China often does, they want to make sure that everything works correctly and make sure that the powers that be have some level of control over the system before slowly but surely moving over to decentralization, which they've begun to do. So it'll be interesting to see how this hybridized, centralized, decentralized system works going into the future. Number 11, we have Tether. Tether is the biggest stablecoin. A stablecoin is a coin that is pegged to a dollar, euro, or yen. So essentially it allows individuals to move into dollars without actually having to cash out of the crypto market. This was originally entitled Realcoin and was founded by none other than Brock Pierce, an individual heavily involved with Block One, EOS, and the crypto scene as a whole. Realcoin eventually rebranded to Tether to avoid any altcoin association. Despite claims of being 100% backed from US dollars, there's been a lot of shady information surrounding Polish banks and potential wash trading, and Tether has confirmed that its relationship with its auditor has, quote, dissolved. So really right now, Tether is kind of sitting in legal limbo, although they are making moves to become more secure and transparent. Wrapping up our examination, we have Tron. Tron is another Chinese cryptocurrency that touts a high throughput, scalability, and high reliability. This is interesting because Tron doesn't have a clear use case as of yet, however they did recently launch their mainnet. Tron, keeping with the theme, is highly centralized, being that they use what's called super representatives. You can see here 90 candidates are currently petitioning to be super representatives, and this assumingly works similar to the DPoS system, delegated proof of stake, that EOS uses. Charles Hoskinson, who helped to invent delegated proof of stake, recently commented to Justin Sun, developer of Tron, that hey, maybe that would be a good solution for your super representative situation. That's all we have for the coin overview today. Let's go ahead and get into the Crypto Coffee update for July 16th, Monday. Coin Agenda Europe is happening in Malta, the Pillar Unconference is continuing in Vilnius, and Korea Blockchain Week is kicking off in Seoul. Going on for Tuesday, July 17th, we have the Seoul Beyond Block Summit and the NEM meetup happening in Mexico City. That's all we have for Tuesday, July 17th, and for your Crypto Coffee update, as usual, links below in the description, along with a gigantic list of B-list tokens. They're fine coins, there's just far too much to talk about with respect to time, so keep an eye on that. You may see some of your favorite coins down there, and you don't want to miss those. And thank you so much for watching. Your support really does mean the world. We are 100% self and donation funded, so if you could drop us a like on Viewly, that would mean the world. After all, we do get a little bit of tokens from that. But that's it for me for the day. Thanks again for watching. My name is Paul, and remember, the tide is rising.